Trump's tariffs global shockwave. What will be the impact on America, China, and India? Have you ever thought that one country's leader's economic move could shake the entire world? That's exactly what's happening right now. US President Donald Trump's tariff policy has not only brought America and China face to face, but it has also jolted everything from Asia to Europe, global stock markets to everyday consumers. And now, with the release of a new report by global rating agency Moody's, it has become clear that Trump's move is going to impact not just one country, but the entire global economy. What will happen to America? Will China be able to recover? And will India benefit or suffer in this trade war? Today we'll dive deep into this topic. But before that, if you are new to our channel, don't forget to subscribe so that you never miss an update from us. So let's begin understanding this entire story in detail. The most important point highlighted in Moody's report is this: America's trade policy is now weakening the sentiment of its own consumers. When consumers see instability in the market, prices soaring, and imported goods becoming expensive, their confidence begins to shake. This reduces consumption in the market and puts brakes on economic growth. Trump's tariff policy carries the risk of lowering demand in the American market, which makes investors more cautious. The report expresses particular concern for Asia. Moody states that the more tensions rise between the US and China, the more it will impact the economic prospects of the entire Asian region. China's economy is already going through a slowdown, and if more pressure builds up, production, exports, and investments in China could all decline. This would directly affect those Asian economies that are deeply interconnected with China in terms of trade. Moody's report states that China's economic slowdown is not just a concern for itself, but a warning bell for the entire Asia-Pacific region. According to the report, if Trump's policies lead to a decline in China's exports and reduced investment, it will affect countries like Taiwan, South Korea, Vietnam, Malaysia, and Thailand. These economies are significantly dependent on Chinese demand. As a result, millions of jobs in these countries could be at risk. However, within this crisis lies an opportunity for India. Moody's notes that countries like India, with large and robust domestic markets, could benefit to some extent from this situation. Companies looking to move away from China might turn toward India. But there is a warning too: the shift won't happen overnight. It may take several years for investors to gain confidence and for India to demonstrate policy stability. Moody's senior vice president, 𝐮𝐿 𝐵𝐷, stated that Trump's 90-day tariff relief for some countries is a positive signal, but since China has been excluded, pressure on it will continue. She added that if China responds with retaliatory tariffs, the tensions could escalate further. 𝐵𝐷 also emphasized that if Trump continues this policy, it may ultimately impact the US' own economic growth. One key point Moody's raised is the unpredictability of US trade policy. When policies keep changing, tariffs being imposed and then withdrawn, it creates uncertainty in the market. This affects companies' planning, leading them to delay investment decisions. In such conditions, not only foreign companies but also domestic businesses are impacted. That's why Moody's believes this policy instability could slow down global economic growth. In the context of India, Moody's Analytics recently released a new report in which it revised India's GDP growth estimate downward to 6.1%. Just a few months ago, the growth rate was expected to be 6.4%. This drop is significant and directly tied to the global economic situation. The ongoing tariff war between the US and China is neither entirely free of risk for India nor entirely filled with opportunities. The cut in this growth estimate is due to India's substantial involvement in global trade. If tensions between the US and China persist, it could become harder for India to export. Additionally, factors like crude oil prices, fluctuations in the dollar, and impacts on foreign investment could also influence India's economic condition. Another interesting aspect is India's domestic consumer market. Moody's report notes that one of India's strengths is its large and diverse domestic market. If the government takes timely and appropriate measures, India may be able to partially cushion the impact of the global slowdown through domestic consumption. However, for that to happen, policy stability must be maintained, the business environment should improve, and investors must be given confidence. Now, speaking of China, its economic slowdown is not a new issue, but Trump's tariffs have made the situation even more difficult. Chinese exporters now have to pay higher taxes to sell their products in the US, which has cut into their profits. Additionally, as Chinese goods become more expensive in the US, demand has declined. This has affected China's production sector, leading to layoffs and an accelerated slowdown in its economy. China's current situation is also a matter of concern for other Asian countries, as China's economic network is deeply connected across the region. If China's economic crisis worsens, it will have a ripple effect throughout Asia. Moody's warns that if this trade war intensifies further, it could trigger a major global recession. And this recession could be even more severe than the 2008 financial crisis, because this time, the root cause is not just banking or housing, but a deep strain across the global trade system. In all this, even the US is not safe. Moody's report states that American consumers are increasingly burdened by inflation. Due to tariffs, imported goods have become more expensive, pushing everyday items out of reach for many. As a result, inflation is rising in the US and consumer sentiment is weakening. If this trend continues, domestic consumption in the US will decline and GDP growth will also take a hit. On the other hand, American companies are not immune to these effects either. Those that used to import goods from China and sell them in the US now either have to pay high tariffs or look for alternative suppliers. This has increased their production costs and reduced profit margins. Many of these companies have started planning to move their manufacturing units to countries like Vietnam, India, and Indonesia, but such transitions require both time and capital. So in the short term, these companies are operating at a loss. If both the US and China remain firm on their tariff policies, the whole world will have to bear the consequences. Moody's report is essentially a warning that if a resolution is not found soon, the risk of a global recession could become a reality. And it may take years for the global economy to recover from such a downturn. In the context of India, it is crucial that the government formulates the right strategy in response to these changing global dynamics. Stabilizing foreign trade, boosting domestic investment, and strengthening the MSME sector should be key priorities. Additionally, to attract global companies, India must take concrete steps in areas like tax policy, land allocation, and labor reforms. One thing is clear from this entire story: the global economy is now more interconnected than ever before. The policy of one country can have ripple effects across entire continents. Trump's tariff strategy has shown that no country can remain completely isolated and still feel secure. Whether it's the US, China, India, or Europe, everyone needs to come together to tackle such global crises.
This video has taught you something new. Do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.